Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, May 5th. Happy Cinco de Mayo, everybody. Hey, we just got a couple items here on the economic calendar. It's kind of a light day today, so we'll just jump right into it and keep it nice and short and sweet for you guys. Today we got basically items on the services industry, and the two indexes is the market services PMI for the month of April. So back in March, it was at 40.9. Anything below 50 on these is considered a contraction. So this had already started the month off in contraction, and it dropped further declined in April to 26.7 is the final number. Now we also got the ISM non-manufacturing index. So we were just above expansion area in the expansion area in March at 52.5. Forecast calling for a drop to 40, and it dropped all the way down to 41.8 in April. So to jump ahead here to the headline news, stocks are up this morning. They're kind of basing everything on optimism. We're starting to get some reports that in other countries, and of course we're hearing about the states here in the U.S. That stores and everything is opening. In California, it was announced come Friday that some retail stores could start opening for curbside service. So we're just in phases at slowly opening up, reopening the economies. So we're starting to see this more on a global level as well. Also, there's some vaccines that are out that they are working on to see if they work. So tests. It looks like there's a German and U.S. company kind of working on those together and in partnership. And it looks like they are underway with those type of tests to see if they work or not. Also today. We're seeing the U.S. For all the government spending the appropriations, they are borrowing $3 trillion, which is by far the most they've ever borrowed before. I think the most they borrowed was in one whole year. This is for just the second quarter. In one whole year, I think the largest they ever was right around 1.29. To give you a gauge as to what's the borrowing cost, what they do. So this will bring this up to right around $25 trillion in debt. So obviously not a good thing. This will obviously have to be repaid at some point. Uh, so, but anyways, for the time being, we need to get this done, get us through these times. So let's kind of move ahead here, see how this is affecting the bond market. Bond market is still trying to stay above this level here. Again, the Fed is buying some mortgage-backed securities, but they have been decreasing those limits, so we'll have to see if they can kind of maintain itself. It is kind of staying above this 25-day moving average, even though it's kind of testing it. We're up currently about 3 basis points. So basically, there is no change. I would say mortgage rates are unchanged from yesterday's pricing. Again, this is kind of rising upwards. Again, we'll have to kind of see if we drop below. If it does, we have a pretty good sized drop, almost 80 basis points here between these two here. Um, Actually, almost 100 basis points. If we look at about 100 basis points between the 50-day and the 100-day moving, or I'm sorry, the 25-day moving average here, it's got a pretty big drop there. All right, and yields are also trying to fight above to keep below its 25-day moving average, and right now it's just sitting under 0.65, so it's right there at that line, what we're looking at. All right, so that's pretty much the wrap for the day. If you guys are looking to buy or looking to refinance in California, please reach out. Love to hear from you guys and see how we can help you guys out. You can reach me by either direct message me or email. Email is the quickest of the two. You can also, if you guys are ready to start, I'll put a link down below and you can start putting in your information and upload any documentation you might have, and we can get together and talk about how we can help you guys out. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow's video. Bye-bye.